So Q, it's great to see you. And I guess my first question for you is, how are you? What's your world like right now?
Hey, Jason, great to see you. Look, right now, it's all about adapting and it's all about accelerating. And let me tell you what I mean. It was very clear to me early on in this crisis that the mindset we needed to have was how do we adapt and push forward? Because folks were all thinking about returning and how do we go back and what's the new normal? And the way we've been thinking about it is there's the before and there's the after. And we're in the after. It's just going to be different. So it's all about adapting. I'm really pleased with our teams. Our people have done a remarkable job of adapting to this remote work environment. I actually call it, Jason, living at work. And we've been so effective raising money in a virtual environment. We've been so effective getting deals done in an environment with remote video with management teams all over the world. And we've really adapted well. Now the question is, as we reimagine the future and as we try to continue adapting, how do we build on our momentum? And as a firm, how do we accelerate our growth? Because our performance has been great, knock on wood. We really have some tailwinds in our industry, as you know. And how do we keep that momentum going and accelerate our growth? And then the final thing I would say, Jason, we have to do all this while ensuring that our culture doesn't erode because of the very difficult and challenging conditions of this current work environment. As you know, culture is everything. It's all about culture at Carlyle. And I'm very focused on, and I think all good leaders should be focused on, the negative impact and the negative implications of this living at work environment as it relates to firm culture. I know we as a firm can sustain and keep this going for a while. It may not be sustainable over the long term.
Yeah, so let's talk about that because you've hit on the exact question I think that every leader is wrestling with, which is the productivity versus culture question. And as you say, and you know this so well, having worked in private equity for a long time, these are firms, yours being a primary example of it, that are really a manifestation of the human beings who lead and work at that firm. So take me down a level. How do you instill that culture? How do you bring someone on board and how do you motivate the people who are already there in a Carlyle way?
It's obviously the question that all folks need to be focused on. Yeah, we're very fortunate because of our strong culture. We've been able to adapt incredibly well, but there's erosion that's going on every day, as you know, and so it means that leaders have to pay real attention to onboarding new employees and new people and new teammates. It means we need to figure out ways to connect with each other horizontally, not just within your own groups. It means we need to ensure that in a virtual environment, it's so hard to find your voice, even in a normal physical environment. Imagine how hard it is to share your opinions when you have 40 people on a screen. And so ensuring that you have inclusivity and keeping that alive, all very important. So we've got great folks in HR, great folks around the world thinking about this. We have adapted really well to using virtual technology to enable us to onboard better, to use virtual video technology and the new world we're in, to have training sessions, to remove and do everything we can to mitigate unconscious bias. So these are all the things that we're very conscious of as we evolve and feel our way through and adapt in this very different work environment.
Do you worry about people burning out?
I do. It's funny. I find that some folks, like, for instance, we have leaders who can be now in London, Singapore, and Sacramento, all within a period of 2-3 hours, all in very high impact meetings. And I know myself, I'm up very early in the morning speaking to Asia and then London, and then very late at night speaking back to Asia. And I do worry about burning out. So I think everyone has to be very conscious of, and leaders have to be very good at appreciating the difference between personal boundaries, professional boundaries, be very sensitive to that. But I think, Jason, it requires real empathy because it's very difficult to impose or have a monolithic view on what's happening. All of us are going through this in very different ways. And whether you're young or you're older, or whether you're in Asia, or whether you're in Europe, whether you've got kids, whether you're alone, all very different. And so to be prescriptive, overly prescriptive in a monolithic way, I think you lose the battle. You got to make sure that your people are your number one priority. You have to have that lens of empathy. And then you have to really focus on continuing to work on ways to build culture, to refresh it and keep it alive as you continue to adapt in this environment.
So if we're in the after, let's talk about what the world looks like now and in the near term, Q. We've got a presidential election. We could talk a little bit about that. We've got an economy that is uneven, to say the least. But we also have a stock market that has been, without question, robust. How do you square that, especially when it comes to buying and selling companies? And I would imagine a world where valuations may not always match up with what you would imagine they would be.
Yeah. I mean, think about all the trends that we're seeing right now, Jason. Low interest rates for longer, very high valuations. And you're right, the stock market, although I'm not so sure it's a stock market, it may be a market of stocks.
Mm-hmm.
Okay, we can get into that in a bit if you'd like. Think about the low global growth. Think about the disruptive impact of technology. Think about inequality, divisiveness, trade tensions between US and China. Those were all trends that actually were in place before COVID. What COVID has done is it's accelerated those trends. And so I like to say the future has arrived early. And what's happened with those trends is it's had a very uneven impact on the nature of the recovery. So depending on whether you're in different regions, different asset classes, depending on what industry sectors you're talking about, the nature of the recovery has caused a very different impact. And despite what we're seeing in the real economy with dispersion of outcomes, you're right, the stock market is roaring, and it's primarily driven by, as you know, a handful of stocks in the tech sector. And I think the difficult part of this whole equation is that you have significant liquidity that has created an ability for these valuations to stay high and in some cases even push higher. And so the issues I think we all have to be aware of is, in my mind, liquidity does not equate to solvency. And we have to think about the fact that after the last great financial crisis, we had situations where companies were quite solvent, but were in fact illiquid. But this time around, Jason, it very well may be that we have companies that are actually insolvent, but remain liquid. And so if you go back to the spring of this year, I was very worried about what would happen in 2020 with the onset of the crisis. And I think it's fair to say, as we look back now, 2020 may have exceeded our expectations from when we were earlier on in the year as to exactly what happened. The problem may be, though, however, we've kicked a lot of issues into the future. We've deferred a lot of issues. And that's when the square will be circled, or the circle will be squared up, so to speak. And that next year, some of those issues may come home to roost. And what you may actually have is a less, versus expectations, a less positive year. So we do really think that there's a separation between the markets and the real economy right now. It is supported by liquidity, and it's going to be an interesting environment moving forward as we navigate through it to see where the opportunities really will be and how to take advantage of them. You know, the good news is, at least at Carlyle, we've got such a long-term perspective with such a global platform with industry expertise, and we're perfectly prepared and positioned for these types of environments as we try to navigate through.
So let's talk about that. What are the conversations that you're having with your deal teams? What are they bringing you that feels interesting in terms of sectors that maybe you've invested in traditionally, or maybe you've stayed away from? I mean, you've invested across the spectrum, obviously, but I think about something, to get specific, like retail. Like retail, I feel like has had an acceleration to the downside in many
Correct.
ways that was already underway. So how do you invest in a space like that right now?
Yeah, you've put your finger right on it. I think there's a wide dispersion of outcomes. Certain industries we're seeing in our portfolio are accelerating in their growth, be it a Zoom Info or a One Medical in telemedicine, whereas other sectors and could face existential issues to the point that you just raised. So it's really dependent on having industry expertise and a global platform so you can quickly sort through where you think the winners will be and where we should be more circumspect in terms of our investing approach. I would say, in general, there are a couple buckets to be thinking about. First, Asia in particular is growing faster, and we just see lots of opportunity there. We've invested close to $1.5 billion already in healthcare companies, in tech companies, in data centers in that part of the world. We do see huge opportunity in credit because asset classes are reacting differently. In credit, we see a lot more opportunities because of some of the volatility and the dislocation that's occurring. And then finally, I think you have to be able to pivot. And while the big, large buyouts and carve-outs are delayed at the moment, we do see huge opportunity in growth private equity, and particularly in industries like technology and healthcare.
And so are there industries that you think are, and I'm going to go back to retail just because it's something
Sure.
I've been thinking about a lot, and even thinking about something, an example we've been kicking around here, like the fitness industry, like the gym industry. Are there things that just go away owing to what we've all experienced, or is this just a pause?
This is the fundamental question. What's going to really be different in the future, and what is just temporary? Studies have shown it takes about 21 days of repetition for a consumer to change their behavior and get used to new habits. I do think you're going to see real changes in some of these industries that you've pointed out. But it's going to be very different region to region, industry to industry. So for instance, in China, domestic air travel is already at pre-COVID levels.
Wow.
That's clearly not the case here, clearly. How business travel evolves, how leisure evolves in the United States is going to be fascinating. But it points out the very differences, the very different natures of the impact of this crisis across region, across industry sector. And it points out you need to have a global platform and a multicultural orientation to be able to appreciate how to take advantage of those changes, but also how to be really wary and a little bit more skeptical.
And so in a situation like that, where clearly this is an uneven global economy, do you reallocate resources? Do you kind of staff up in one area, even if it's sort of virtually staffing up? Like, how do you respond to that in real time?
Yeah, we don't really move people around like that. We have strong industry sectors. They remain focused because we have a long-term orientation, and while there are growth opportunities in those areas that are doing really well, I will point out, Jason, that in some of those industries that have been more hurt, there could be really interesting opportunities on a value basis, right? And so we are continuing to look at these industries, but the nature of the thesis will change. As opposed to looking for pure growth, we're looking for value. I'm not so sure that now is the right time to dip our toe in because there's still things that are evolving. But rather than moving folks around and reacting, we'd rather set up our platform, invest in the areas behind our great people, and stay the course in a steady way because there are going to be great growth opportunities and value opportunities over the longer term.
So Q, talk to me about the retail investor, because there has been a segment of the investing population that has been in a world of very few winners, big winners throughout all of this. You see the uptake of a Robinhood as a platform. You see a wider aperture, it feels like, of retail opportunities into alternatives. You guys have obviously played in that as well. Where are we? Is that something else that has accelerated?
I do think this is going to be a big opportunity moving forward. I do think there's going to be an acceleration. I think it points to the fact that alternatives are really more mainstream than you'd think because of our performance and the alpha that our asset class can generate. I do think retail, and by retail, I mean the 401k market.
Yeah.
I think accessing that market is going to be harder than people think. There are operational issues, there are technology issues. You need to ensure the ability to have marks and liquidity that fits and is appropriate for the retail investor. So no doubt, we're looking at this hard. We think there's going to be opportunity. We're going to be very thoughtful about it. We need to be responsible about it, and in due course, go after the opportunity that clearly exists. And it's going to stay here for a long time, Jason, the opportunities in retail.
Talk to me a little bit about politics, if you can. We're 20 some odd days from a U.S. presidential election. Your firm is based in Washington, although it's global. You guys have a lot of insights into not just the political world, but how that plays through into the investment world. Given what we're facing here, how do you approach an election like this, knowing that you're a long-term investor? So I'll anticipate that answer right now, but you still have to brace yourself for some measure of change, I would imagine.
Sure. Look, first of all, let me just say there's still a lot of time left. But no doubt, we're looking at this very hard with advisors. There are lots of issues, lots of scenarios to look at. Everyone talks about tax policy, but you also have to think about regulatory changes. You have to think about fiscal stimulus, and you have to think about all the other offsets to tax. And so we're looking at it. I think we're going to be prepared. And we're modeling out a whole bunch of different scenarios. I think we're going to be well positioned no matter what the outcome is.
So I want to wrap up sort of where we started, which is sort of the future of Wall Street. You're someone who deeply understands the financial system globally, having been a senior partner and now a CEO at 2 different private equity firms. You understand the connectivities between New York and Washington and London and Hong Kong and everywhere else. How does Wall Street change amid all of this going forward? Like, what sticks in terms of how the global financial system, especially when it comes to deal making, operates on the other side?
Yeah, I think what's going to stick is an incredible awareness of horizontal connectivity across a whole, across a wide range of variables. It's not only people within a firm and clients, but you have to just be aware of the different ecosystems across countries and issues in China and in Europe. You have to be aware of on a industry level, technologies that are emerging and how that impacts different ecosystems. And it's going to be much less of a bubble that folks are focused in on, and much more a lateral, if I could say, a lateral view of what's happening. And I think it's incumbent on the financial sector to appreciate how integrated it is across the world and across all industries. And the success of these firms are going to be dependent on having a multicultural orientation and a perspective and an ability to really help businesses, leaders, countries, not just in terms of financial issues, but all aspects of what a business is trying to accomplish.
So last question, from a personal perspective, you take over the sole CEO role earlier this year. You have managed through a pandemic and so many other things going on in the world. What have you learned about yourself as a leader?
Yeah, let me just caution, we haven't managed through completely yet, right? So we're still going through this, we're still evolving, we're still adapting. But I'm very fortunate. We've got great people and teammates around me. And I think what makes me most proud is that we were all able to rally together, really prioritize. We focused on our people, focused on our portfolio. We really came together. And it's making the jump from just thinking about deals to thinking about companies, thinking about people, thinking about families, and working together as a team to ensure that your priorities are being met. And so it's been fun. There's a lot more to do. I feel really great about how we're positioned. And clearly it's about continue to adapt and then continue to build on the momentum we've generated.